YouTube, it's Marvish Jeanette, and I am back with another video. As always, first and foremost, all praises be to the Most High who makes all things possible. You already know that I'm coming with the heat. I'm coming with the hot topic, and I have some valuable information for you all today that you can take and apply to your life. But you already know, before we delve into this heat, if this is your first time ever tuning into my channel, go ahead right now, hit the subscribe button and hit the bell notification button so that each time I upload content, you will be notified. Leave me a like every time you see my face, and right now in this moment, go ahead and leave me a comment letting me know that you are here. I'll give you a quick moment of silence to make that happen for me, and also for me to get me a little juke in. Thank you so much for making that happen for me. To all of my old subscribers, my current subscribers who just continuously comes back to this channel asking for more, thank you so much for tuning in again. I do appreciate you oh so much. You all are key components in the growth of this channel. So thank you. What is the topic of today? So you already know that yesterday I told you all that I was going to come back to explain to you how you can get build your portfolio, get more shares at a discounted price. However, before I delve into that topic about SNDL, I am going to share with you all how I profited $200 today on the stock market. So I jumped into a call option with NIO. If you all know, the stock market has been bleeding just about all week long. So I did a $50 call on NIO, and I'm just going to, you already know, I'm notorious for showing the screen, so I'm going to share this with you all right now. So here's my position. I bought 3 contracts of NIO, a $50 call. It cost me $1,085. I was not entering this trade to hold it over a long period of time. I just wanted to pretty much get in and get out. I had $200 in my mind. I wanted to hit 200 and then I wanted to be done with it. Luckily, I came out with $205 in this trade. So that is absolutely amazing to just basically come up with. I'm $205 richer and I entered this trade earlier this morning, probably around maybe somewhere between 9 and 10, and I was out of it before lunchtime. Of course, it went up a little bit more, but if you look at it now, it's already down some more. I think it's like somewhere around $46 and something, maybe close to 45. So I'm definitely going to keep my eye on NIO, and if it dips back down to $44 or $43 or even lower, I will definitely be looking back into doing another call option on it, because I already know that its home is around the $50-something mark, so I already know that it's going to go back up. But I'll just play that by ear. But I just wanted to show you all how I came up $205 richer today. So with the call options that I did this week, I made a little over $300 with those calls. So you all can definitely start to study call options. They can be so great to you. It can build you up, and with the same breath that they build you up with, they can tear you down. You hear me? So definitely be careful with trading options, because you can gain a lot of money and you can also lose a lot of money. So that was the option that I wanted to share with you all. But another option that I made mention to you all yesterday was SNDL, and I was going to share with you all how to build your portfolio at a discounted price. So you already know, well, you don't know, but from now on you'll know. Where are we heading? We're heading to the whiteboard. Come on, so I can teach you all how to get these shares. So I almost forgot to give you all my disclaimer, and I almost feel like doing some karate on y'all, because y'all almost made me forget to give my disclaimer. I'll fight y'all right. I'm just kidding. But in no way, shape, form, or fashion am I offering you all financial advice. I am simply letting you all in on what I'm implementing in my life. If you choose to follow suit, you are more than welcome to. Let's get into this option. All right, so I'm going to explain this to you all as clearly as I possibly can. So the stock that I was trading is Sundial Growers, ticker symbol SNDL. So I bought a 50-cent call option on yesterday with an expiration date of 2/26, which is today. So my plan going in was to get the nearest expiration date to buy that call, which would afford me the opportunity, after allowing that call to expire, to walk away with 100 shares at a discounted price. What do I mean by discounted price? Instead of getting 100 shares at $1.30, if that's how much the share costs, I will be getting those 100 shares at the 50-cent call price. So the 50-cent call was being sold at 90 cents. So, but I paid $90 for the call. So why did I pay $90 when it says 90 cents? I'm glad that you asked. So one contract is 100 shares. So if you multiply the 100 shares by 90 cents, that's how you get the $90 that I paid for the call. So 90 times 100 equals $90. So I paid $90 to enter into this contract. The goal is to allow this $90 contract to expire. So as long as the price of SNDL does not go below 50 cents, then you are in the clear to get the 100 shares. So this is how it works. You pay the $90 for the contract. As long as the option expires and you are in the clear, you will be afforded the opportunity to get the 100 shares at the 50 cents price. So you'll do the 50 cents, multiply that by the 100 shares, and you get $50. So you'll pay $50 to get 100 shares instead of getting those 100 shares at the stock price, which is $1.30. Your average cost will be $50. So you know how I normally say, if you buy in at a stock at $10 and it dips down to $7, you want to buy at $7 so that you can close that gap, and your average cost will be around $8.50. So to bypass all of that, this is how you do it with trading options. So you're going in with the mind that I'm about to get 100 shares at 50 cents. So I don't even have to worry about closing the gap because I'm getting these shares at 50 cents. All right, so my average cost is 50 cents. And I will show you all in my portfolio where my average cost for SNDL is 50 cents and something, because when I first bought it, it wasn't an even 50 cents. So that's how I got the little 0.504 or something like that. But as long as you do it this way, you don't have to worry about closing the gap. I got 100 shares at $50. So what happens with the $90 that you initially invested in the call? So here are the $90 that you initially invested. They simply go to your total return. So they don't go back into your buying power or anything like that. It goes to your total return. So it automatically looks as if you are up for your total return. So you all see I went from being at I think $120 yesterday, and now I'm at $206 for my total returns, because that $90, it actually was not $90 because the stock did dip some today. So I think it was like 80 something dollars that I still had from this call, and it simply went to my total return. So the total amount that you would be spending technically on this call would be the $90 to enter into the call, and then the $50 to buy those shares at that discounted 50 cents price. So the total was $140. But the great thing about this is I don't have to worry about closing that gap, because my average cost is still 50 cents. So this is the luxury of trading options. This is a great tool if you want to use it for building your positions, but you don't want to continue to build your positions at a higher buy-in point. Granted, it can be a little more pricey. However, I look at it from the standpoint of I'm already up. So this is, it doesn't get any better than this. One contract is $100. So I bought that 50-cent call. It was 90 cents. 90 cents times 100 equals $90. $90 to enter into the trade. Once the trade expired, it afforded me the opportunity to get 100 shares at a 50-cent price. That 50 cents times 100 is $50. So I paid $50 to get 100 shares of SNDL. So my total out of pocket was $140. And I am absolutely satisfied. My position has been built up even more. I'm currently sitting at 250 shares of SNDL, and I plan to continue to implement this strategy because SNDL is going through the roof. You can mark my words if you choose to, but this is definitely a long-term hold for me. Definitely do your research to see if you want to, add this to your portfolio. If not, then, there's always going to be another trade. And you already know what we're doing here. We are building wealth one trade at a time. I do hope that this video has been informative to you. I hope that it has been beneficial for you. If you have any questions, comments, or concerns, feel free to leave me a comment below, or you are more than welcome to utilize my email address in the description. I will definitely get back with you. We are growing together, and I am also thankful. I'm also excited about everything that is transpiring. If you have anything that you want me to touch on this channel, please feel free to let me know. And please, always let me know what it is that's in your portfolio. Maybe I would like to add it to mine. Thank you so much for staying to the end of this video. Make sure that you leave me a like. Share this video, all of my videos, with all of your family and all of your friends. I would appreciate it greatly. And of course, until next time, because there will always be a next time, may peace and blessings be unto you all. Thank you.